everyone, welcome back to our International Business course. Today, we will explore a crucial topic, the legal, technological, accounting, and political environment in international business. As business expands across borders, understanding this for environment becomes essential for success. Let's dive in and discover how each of these areas impact global business operation. First, legal environment. The legal environment in international business refers to the laws, regulation, and legal system of the countries where business operates. When a company enters a foreign market, it must comply with local laws concerning labor, contracts, property rights, taxes, environmental protection, and more. However, legal systems differ greatly between countries. For example, a business operating in the United States must deal with a common law system, while one in France operate under civil law. Additionally, international laws and agreements such as trade treaties, anti-corruption law, and intellectual property protection also influence how companies behave globally. Non-compliance with legal norms can lead to severe penalty, lawsuit, or even bans from operating in a country. Therefore, business must invest in legal expertise and remain up to date with regulation in every country where they operate. Importance of legal due diligence. Before entering a new market, companies must conduct thorough legal due diligence. This involves assessing the host country regulatory environment, understanding licensing requirements, and reviewing any restriction on foreign ownership. Legal experts often help firms interpret ambiguous laws and navigate complex legal procedures. Ignoring this step can lead to contract dispute, investment losses, or legal shutdowns. Next, technological environment. The technological environment refers to the level of technological development and innovation in a country. In international business, technological influence how companies communicate, produce goods, deliver service, and compete. Countries with advanced technological infrastructure, such as high-speed internet, automation, or digital payment system, offer a more competitive business landscape. For example, a company operating in Japan may benefit from robotics in manufacturing, while one in a developing country may face limitations due to poor connectivity. Moreover, technology enables global collaboration, e-commerce, and real-time customer service. Business must adapt to the technological capabilities of each market and sometimes even bring new technological to stay ahead. Cybersecurity is another major concern in today's digital era. Firms must protect their data and system across borders, complying with data protection laws like GDPR in Europe. Innovation and competitive advantage. Technology not only supports cooperation, it also creates competitive advantage. Firms that leverage AI, data analytics, and smart logistics can optimize costs and better understand consumer behavior. Adapting to a leading test trend can differentiate a brand and enhance its global reputation. In addition, technological agility allows companies to pivot more quickly in response to market disruption. Next, accounting environment. Accounting system and financial reporting practice differ significantly across countries. This is due to different accounting standards, taxation system, and financial culture. For instance, while companies in the United States follow generally accepted accounting principles atau GAAP, firms in many other countries follow International Financial Reporting Standard or IFRS. This difference can create challenges for multinational corporates when consolidating financial statements or comparing performance across subsidiaries. Also, countries vary in their transparency requirements, disclosure rules, and auditing process. Business must understand and comply with local accounting practice to avoid financial misstatement, penalties, or loss of investor trust. Understanding the accounting environment also helps companies make informed decisions, manage costs, and meet shareholder expectations globally. Transparency and investor confidence. A reliable accounting environment increases transparency and building investor confidence. International investors often assess a country accounting standard before allocating funds. If accounting reports are inaccurate or hard to interpret, capital flow might decrease. Therefore, global business must strive for high reporting quality to attract partners and maintain stakeholder trust. Next, political environment. The political environment refers to the stability, policy, and government action in a country. In international business, politics can significantly impact operation, investment decision, and profitability. Political stability gives investors confidence, while instability such as civil unrest or government corruption can pose serious risks. Government policy related to trade, foreign investment, taxation, and labor laws all influence business strategies. For example, a country that supports free trade and offers tax incentives may attract foreign companies. On the other hand, restrictive regulation shouldn't policy change, or nationalization of industry may discourage investment. Political risk assessment is crucial before entering a new market. Multinational companies often use insurance or risk management strategies to protect themselves against political upheaval, expropriation, or sudden change in law. Global trade policies and diplomatic relations. Trade agreements and diplomatic relationships between countries can either open up or restrict access to markets. For instance, a free trade agreement and reduce tariff and import competitive, while a trade embargo can entirely block market entry. Understanding geopolitical relations helps companies make strategic decisions about partnership, searching, and regional expansion. Integration and impact on business strategy. These four environments, legal, technological, accounting, and political, are deeply interconnected. A change in one area often affects the others. For instance, a new political regulation may impact technological investment or change accounting requirements. Successful international business continuously monitor and adapt to this environment. Before entering a new market, companies conduct PES analysis, which stands for Politic, Economy, Social, and Technological Analysis, to assess opportunity and risks. Legal, account, legal and accounting evaluation are also part of the due diligence process. This step ensure business can align their strategies with the external environment and avoid costly mistakes. Environmental synergy and strategic flexibility. To stay competitive, business must not only understand this environment individually but also have they interact as a system. For example, a politically stable country with advanced technology and transparent accounting standard over a more predictable and attractive market. On the contrary, environments with conflicting legal and political framework may require more adaptable strategies. Companies that develop strategic flexibility such as contingency plans, diverse supplier network, and adaptable financial reporting tools can better weather external shock and maintain continuity. Cross-border coordination and compliance strategy. Operating in multiple international environments requires strong coordination between local and headquarters teams. Firms need consistent compliance strategies that align with global governance while being sensitive to local variation. This includes hiring local legal and accounting experts, investing in compliance training, and integrating global standards with local regulation. A well-structured cross-border compliance framework minimize risks and enhance strategic clarity across all markets. Conclusion: understanding the legal, technological, accounting, and political environment is vital for operating successfully in international markets. These elements shape the rules of the game and determine how flexible, innovative, and compliant a company can be. As future business leader and professional, you must develop the ability to analyze this environment critically and make informed decisions. With strong awareness and adaptability, business can thrive in the complex and dynamic world of international trade. Thank you for watching and see you in the next video. Bye bye.